Fed June FOMC meeting speech. So what they said in press conference, let's see one by one all statement. They obviously said in the beginning CPI index which came this morning tends to run higher than PCE index. That was most important thing because CPI does not say Fed should shift from 3 to 1 cut. Then again, do not expect it will be appropriate to reduce target range for federal fund rate until we gain greater confidence that inflation is moving down towards 2%. So they are saying until they get confidence, they will not cut interest rate. That inflation is moving toward 2%. And you have many inflation indicator, CPI and PC, and again two version core and headline. But sometimes their speech looks like comedy because by the time you reach end of this transcript, you will see their confidence is increasing. At the same time, they are saying they need more confidence. They are repeating this line many times and read carefully. Reducing policy strain too soon, too much could result in reversal of progress we have seen in inflation. Exactly what they did in their December FOMC meeting. They did rate cut early. They forecasted 3 cuts while immediately market forecasted 7 cut. And then we have second inflation wave in March month. They did policy change too early and they have reversal of inflation. They are saying but doing opposite. And that was just because of election. Now opposite thing can happen because soon we reach to our election and immediately after election everything will change. Since their December FOMC meeting last year to June FOMC meeting this month, that's what they said but did opposite. Reducing policy restraint too soon, too much, and reversal of inflation. But now trend is changing, so those trade between December to June month can change their direction. But it all started in December. This FOMC meeting was important because we had new SEP and they are talking projection are not committee plan or any kind of decision. If you watch their entire speech, then you will see then they have made SEP a cartoon. What the point of giving that SEP when on that speech you invalidate that SEP? That is just because of election. Then famous line which you are seeing since their first FOMC meeting last year 2023, if labor market were to weaken unexpectedly or inflation were to fall quickly than anticipated, we are prepared to respond. In this FOMC speech, they give definition of unexpected weakening in labor market. And I think this is one of the most important line because this thing alone will drive entire financial market till election day and next year 2025. Then your first question from CNBC news channel. And watch carefully. Committee's average inflation forecast. Core PCE. They forecast 2.8% by year end. That is already 2.75. So they are clearly forecasting second inflation wave. While at the beginning, if you remember, they were saying bump. Their many non-FOMC speech, everyone was ignoring second inflation wave, was saying bump. But now they are forecasting second inflation wave in their new SEP. While gold has already exploded in March month, gold has already traded second inflation wave. Now Fed is saying, these central bank never like gold standard, but gold already traded what they are saying right now, the more upside in inflation. So this was our first question in FOMC speech. He said, does that tell you that average inflation expect to no further progress in inflation? In fact, is going to get worse. And if this is wrong, Fed is saying second inflation wave. If Fed is wrong about second inflation wave in this FOMC speech, then clearly he can wrong about their interest rate forecast. So when second inflation wave risk was not created, they were saying bump ignoring, and now that is over. Now they are saying second inflation wave risk. So market already know their rate forecast which they give in their June FOMC meeting will be wrong, because second inflation wave is dead. Inflation will go down, so rate forecast will automatically go down. Fed said incoming monthly PCE and core PCE number, they were good but not great, because when they have uptick in every inflation number from CPI to core PCE, then they change their forecast. But by the time you have less purchasing power, then when they first time said that is inflation bump, not second inflation wave, and you already have gold from $2,000 to more than 2,300. Whether they like or not, gold is standard, but gold is still winning against central bank. Fed gave a number for your inflation 2.6 to 2.7%. If you all know, in the beginning their inflation target, which now they say 2%, it was hidden. Then they revealed. But now their new hidden inflation target is 3%. Maybe 4%, we don't know. But new one is definitely 3 or 4. So right now they are running their inflation between 3 and 4% inflation target on CPI. And now they are giving 2.6 and 7. That means they want below 3% target. And if you read history, they keep their 2% inflation target secret for so many time. So by the time you know new target is 3 or 4, already we too late. So basically Fed is saying inflation above 2% but below 3% is good. Nick Tamirao from Wall Street Journal, he is most famous person in FOMC speech all the time. For example, before this person ask question from Fed in his speech, before he write news article for Wall Street Journal, he did a tweet after CPI number, and that was sounds like a dovish. And look at this news article, that inflation report will get A from Fed. But what happened? Despite that CPI number, they shift from 3 to 1 rate cut. So outcome of that FOMC was considered hawkish. So this person always say opposite. Your nice inverse tracker. If you remember in May FOMC meeting, he was pushing hawkish Fed, challenging article in Wall Street Journal. But what happened later? We got dovish Fed speech. So next time before you watch Fed speech or read news article, be careful what you are reading. Because Nick Tamirao is not your day trader, not intraday trader, neither he trading gold or euro USD on intraday. While you will read that information and you will make your trade plan for day trading or intraday. Maybe you trading SP 500 or euro USD, maybe gold, but this person is not intraday trader. You cannot escape his view about Fed because he is inside FOMC speech, he is on social media, and he is inside news company Wall Street Journal. So next time be careful what writer of that news article is thinking, because he made clear in that FOMC speech 15 out of 19% anticipating either one or two cut, while just before FOMC after that CPI number he was expecting dovish Fed. You can see he gave example of Fed Waller. This is one of those inflation reading. While at the same time same person is saying 15 out of 19 FOMC member see either one or two cut. If you watch that speech carefully, the hidden politics inside that speech, he's saying would two or three more inflation reading like this, we will see September rate cut or not. That person is thinking first rate cut in September. That is his view. While I see first rate cut in July or November FOMC meeting. So two-person, two different view. Next see in September, I see in July or November. What if you read between line the hidden politics? Two more inflation reading. That's mean July and September FOMC meeting. That's mean before next SEP change. Three inflation reading. That's mean before the November FOMC meeting. After election. And he is not talking about what will happen in their Jackson Hole speech between July and September FOMC meeting. Always super important. You can see Fed have made clear 15 out of 9 kind of cluster around 1 or 2. So you can say FOMC either see 2 cut or 1 cut this year, not 3 like December FOMC meeting. And he also said what everyone agree on is going to be data dependent. Not all just 15 member, or not all 15, something 1 cut, something 2 cut. But this again can change based on data. That means again your CPI number, NFP and your PCE. In his speech, you can see future meeting. We don't make decision about future meeting until we get there. This is total lie, and this is election year. What they will say next day after election in their FOMC speech is totally pre-planned. It does not care what CPI and NFP number will be before and after that FOMC meeting, but what they will say in that speech is totally pre-planned. And what they're planning for September FOMC meeting and December FOMC meeting, then new SEP in both meeting, and again like all the time total wrong forecast for 2025 in December month. That is everything is pre-planned. So do not worry, opposite of Fed, decision are already made and future meeting are already pre-planned. You have CPI number and same day you have Fed reaction, his view about CPI number. So Fed Powell is doing day trading with you on CPI number. You can see, are we confident? Have we reached appropriate level of confidence that inflation is moving toward 2% level? Or we see really unexpected sign of weakness in labor market that would call for a response. Look at the CPI chart. It is sideways. Once it break out range to downside, they will have full confidence and you will be talking about rate cut. So we already have two downtick in CPI. Third downtick in CPI means get ready for rate cut and you have clear date. That's why before you have third downtick in CPI, he is directly saying, are we confident or not? You can read, we do see today's report as progress, building confidence. So more confidence, more progress, but we don't see ourselves as having confidence that would warrant beginning to lose policy at this time. After the December FOMC meeting, they said same thing, and after February FOMC meeting, everyone was asking why finance conditions are loose. So do not worry on third downtick in CPI. They will have full confidence to begin losing policy that time. In FOMC speech, everyone was curious. He asked, did you or any of your colleagues change interest rate projection after CPI number? Because some people are saying last time this happened in June 2020 and recently this happened in their December SEP just before PPI number. They said they shift from hawkish to dovish just because of PPI number. And this was most funny thing in FOMC speech, the CPI number and its effect on SEP. You can listen what Fed is saying from his mouth. When that happened, there is a important data during first day or second day, we do make sure people remember that they have ability to update, and we tell them how to do that. But some people do update and some people do not update, and most people do not update. And Fed Master have said after FOMC speech, she did not update it after CPI, his SEP forecast. So they give a new SEP, at the same time they are saying this is invalid, this is old SEP. So what the point of giving that SEP number? That is your election politics, which you will see in the November FOMC meeting. He have said crystal clear, we will see PPI tomorrow. We will know much more about PCE reading month goes on. So he have said clear, some people generally do, but most people generally do not update their SEP. So that SEP does not include CPI, not PPI. So what they said in FOMC speech and that SEP one cut this year forecast immediately changed after CPI and PPI number. What you saw in that SEP, that was old information, and it will change more after new PCE number. Because you have seen majority of time, first we have FOMC speech, then we have NFP on Friday. While their FOMC speech decision and their SEP update on NFP number. So same thing they are saying that SEP is outdated, does not include those inflation number. And that was the reason gold came down from 2400 in advance, and when we have that speech, we have weekly and daily candlestick closing about 2300. Hawkish speech shifting from 3 to 1 cut despite you have weekly blue candlestick in gold. Another important question, slowly Fed is telling what happened 2 years ago when we have Bitcoin mania, when we have meme stock and many more things. Now he is saying why many measure labor market was overheated 2 years ago. Most lagging indicator, if labor market was overheated, then entire financial market was overheated. If you remember in 2022, people were mad about Bitcoin and meme stock, indirectly saying overheated labor market. That NFP number we saw 4% UR, Fed have said still 4% unemployment, historically low, but it is move up a little bit. So 2 years ago in 2022 beginning and 2021 in the end, there was overheated economy, bubble everywhere. Same thing is saying right now in March, there was stock market bubble, everything was exploding. Your SP 500, your Bitcoin, your gold, and now recently you have meme stock, everything exploding. So there must be overheated labor market too. So he's saying very strong labor market but not overheated labor market of 2 years ago or even 1 year ago. So economic conditions are weak. Markets are no difference between 5% interest rate or 0% interest rate. You have same person doing same thing, roaring kitty, meme stock, gold, Bitcoin, and you can see Bitcoin is almost same place where it was during 0% interest rate. Again, you can see big thing that changed was inflation forecast. This is Fed saying they are forecasting second inflation wave. Inflation forecast move of several tenth for end of this year. So when second inflation wave is over, now they are saying inflation will go up again. But you have gold from $2,000 to more than 2300. He said we had really good inflation data in second half of last year. That's mean after September FOMC meeting last year. Kind of pause in progress in first quarter when their bond market start collapsing and they panic in October 2023, and to save Biden election they ultimately forecast 3 rate cut in 2023 which market doubled and forecasted 7 cuts. So when they were hawkish in September FOMC meeting, higher for longer, inflation was going down. When they pivot first in October, then finally full pivot in December FOMC meeting. Next quarter, we have reverse in inflation. First pause in progress. Now they are saying what we took away from that was it is probably going to take longer to get that confidence that we need to begin losing policy again, which they already did in December and market become mad in January and which they blindly ignore in March in their FOMC, in their all speech and everywhere. If you see their last FOMC, May month and this month, June. In May they said no stagflation. While in this FOMC, zero mention of stagflation word. In stagflation means cut this year will turn into hike next year. While they completely delete stagflation word and doing opposite. If you see what they are trying to say, they decrease number of cuts in 2024 but increase in 2025. So less cut this year, more cut next year. While in stagflation, opposite must happen. If they are increasing rate cut in 2025, that's mean rate hike possibility must increase in 2026. And while your Fed watch tool can only show you September 2025, it cannot go beyond September 2025. More they increase rate cut within next 12 months, more they will hike in future. So if stagflation is coming in future, it is hidden, it is beyond limit of Fed watch tool right now. Because you can watch every person who was sitting in press conference, their news company, nobody talking about why Fed suddenly disappear with their stagflation challenge. In May he was saying where it is coming from. Now zero mention of stagflation. Then Fed said repeatedly surprise forecaster in both direction. In Q4 2022 there was full recession. Then exactly 2 years before election they changed and economic boom start. So recession forecaster failed. Then fourth quarter last year, 1 year before election, they take economic boom to next level, ignoring second inflation wave, especially in March month. And people were forecasting growth, they become wrong again because there was more growth than they expecting. Because you can see there was so much growth in economy, CEO like Nvidia company instead of planning future like Steve Jobs, if you remember, they're busy writing their name on boobs. Because there is so much growth in economy, they can do anything. Why need to worry about future? And recession already cancelled. But don't worry, when recession will come, everyone will panic on recession. This video will go down in history. Nobody will ever forget. They were direct question to Fed. Policy is not as restrictive as previously expected. They said in May FOMC minute, policy is not restrictive, they want more tight condition. But first he said long run neutral rate of interest, long run concept and cannot be directly observed. If you see neutral rate, what is happening right now, 2021 and 2024, markets see no difference between 0% interest rate and 5% interest rate. In both rate of interest rate, you have economic boom. So same thing is saying what is the interest rate where you can have both, neither recession nor economic boom. And that is the first bottom of interest rate cut before the correction to upside. He gave a comment on restrictive monetary policy going to be one we know over time. So right now they do not know, but in future they will know. He have said evidence is pretty clear that policy is restrictive. So if this is the evidence of restrictive monetary policy and roaring kitty meme stock, then Fed is lying and he's saying wrong evidence. Something here in FOMC speech when he said policy right now for almost a year. These sound like Fed talking when we have first rate cut. When rate cut has begun and news companies full of rate cut psychology, then that is the language of rate cut from Fed. If you remember exactly 1 year ago, they hiked in May FOMC meeting after Silicon Valley bank run, full panic that time. All news company, all hedge fund were saying this is your last hike. But what they did is skipped in June but forecasted two hike. But only did a one hike in their July FOMC meeting. So in next FOMC meeting, there will be exactly 1 year for their rate pause. And if you see July 2023, July 2024, exactly 1 year for the interest rate pause. But in 2025, election will be over and there will be no incentive for economic boom to delay recession, which they are doing since 2018 and big way Powell did for Trump in 2020. So if they do not cut interest rate in July FOMC meeting, then it will be exactly 1 year rate pause. When they begin their rate hike in 2022, if you remember September 2022 UK crisis, March 2023 their Silicon Valley bank crisis, then October 2023 their bond market began collapsing. But now news company are asking, you got now this restrictive policy in place, virtually no change in major thing for all of this year. How is this possible? You have three big crises during the rate hike, but now in 2024 no crisis and everyone is still waiting what happened in last 30 year. Every year there is a crisis in March, but this time how is this possible? Nothing happened because maybe Biden have delayed that crisis from March 2024. It is hidden and once it will come, it will shake entire financial market. That's what he's saying. No change in any of major thing for all of this year because we are seeing constant crisis since September 2022. And question will be what will be biggest crisis this year 2024. So gold have already traded second inflation wave from 2000 to 2300 plus, but now news company are asking where the improvement in inflation coming from that is going to pick up pace in 2025. So what is the source of that uptick in CPI and that will continue in 2025 or not? That means after election we will have inflation or not. You can see Fed is trying to say he don't know what will happen till election day. So he is totally unprepared because he do not know. So he is saying we will see what rest of this year brings. No crisis in 2024. If crisis come 2 weeks before election, that it will not affect voter. We cannot know what future hold. They know very well what is the crisis which is hidden from March 2024 and what is the right time to release that crisis into market. And question will be we will know after election or before election. So news reporter again reminding from Bloomberg, base case of committees seem to be that there is going to be at least one rate cut this year. There is a big change from three cuts in December to one cut this year. And to change again from one to three or maybe two cut this year, there will be big change. If you see Powell reply in this speech, ultimately that if you just set policy at this restrictive level, eventually you will see a real weakening in economy. That has always been thought is that since we raise rate this far, we always been pointing to rate cut at certain point. If you ignore that note and see to cut a certain point to eliminate possibility of hike. Again ignore no one that is the base case. If you remember inverse Kaskari, June 2021, and ignore this opposed word and replace with opposite word. Let's say agree. Then Kaskari agreed to rate hike at least through 2023. And you have seen started in 2022, ended in 2023. So this is their language. We cannot do anything. You have to learn and you have to understand. This is the same Kaskari before this June FOMC meeting was saying interest rate will stay in pause mode forever. And do not shock if same person saying rate cut in July. If you read same article again from Fed Kaskari June 2021, rate near zero at least through end of 2023. What happened? Interest rate hike start from zero and we reached peak in 2023 July. So he was saying end of 2023, but before year end they paused in July. So they revealed their interest rate plan in 2021, but this is their language. You have to understand. You can call it anything, inverse, whatever you want, but this is their language. You can read transcript. We had turmoil earlier last year, but bank have been focusing bringing up liquidity, bringing up their capital, having a risk management plan in place. So banking system seem to be in good place. So if there is a big bank having a problem, then we will only know after election. Everyone know in October month last year when they stopped bond market from collapsing, it was Bank of America. So first ignoring inflation two times, first transitory, then bump, then saying wage as being principal cause of inflation. People only read news headline, they never watch entire article. These are view of news company, not intraday or day trader who is trading Euro USD or gold. You can see, can you give us a sense of what one cut by end of this year actually do to economy and meaningful difference if was a cut by end of year or two. So psychology of first rate cut, what they were talking about in this FOMC speech. Fed have said if you look back in 5 year, 10 year, or try to pull out significance to US economy of 125 basis point rate cut. So 25 basis point is very small size when they did 75 basis point 4 hike. But psychological impact of first rate cut is bigger than 100 basis point rate cut. That's what they are talking about. So he have explained everything in detail. When do start to lose policy that will show up in significant loosening and financial market condition, which they're already ultra low. So why they need rate cut? Listen carefully. Once again, they have said if they do first rate cut, then final condition index will lose. And do not worry if opposite happen by the rumor. Sell the news. Most popular hidden secret rule always work best. So he have said we are not that stage of first rate cut. Do not know what will be thinking about it at that time, but they are ready for first rate cut. Important thing he also said in that FOMC speech, maybe he is trying to explain first is transitory inflation failure and bump in inflation. Low inflation is low inflation, but only quarter where it is higher, it is high inflation. Now listen that line from Fed once again, like high school student, like you are studying English grammar. Today's inflation reading, first it is very different, not different, very different, two word. Second, it is not positive, it is very much more positive. He used three extra word to explain how positive this inflation report is. That was your second downtick in CPI number. By the time third downtick we have in CPI number, I don't know how many more word he add before positive number. So not different, very different, not just positive, three extra word, very much more positive. So they have full confidence after two downtick in CPI. So next CPI and NFP number will do nothing but give you date of next first rate cut. So never underestimate style of talking of inverse Kaskari. So read again. We are going to be data going forward. We are looking for something that give us confidence that inflation is moving down towards 2%. Reading like today's, a step in right direction. One reading is only one reading. You don't want to be motivated by single data point. If you apply inverse Kaskari like June 2021 and replace not word, then you read want to be too motivated by single data point. So they are super motivated by their CPI number. Because when Silicon Valley Bank collapsed, their CEO said same thing. They blindly believed in that statement from Fed Kaskari. Because they believed blindly in FOMC statement that 0% interest rate will be there in 2023. And what happened? Bank exploded in that year. Another important line, something beyond inverse Kaskari, not for beginner. We don't tell people how they should think, feel about the economy. If you apply inverse Kaskari, then this reads like we tell people how they should think and feel about economy. That's our job, and people experience what they experience. I think Word is Flat, best book ever written on globalization. First it was USSR. When it collapsed, all those socialist countries become slave of USA on the name of globalization. So they did not replace their news company. They did not replace their school. What they did, they invented completely new system which we call social media. For example, YouTube. They control their education system, they control their news, they control their experience, thinking, and feeling everything. They decide through social media what your education, what is your news, they control what is happening inside your head. And just completely delete social media from economy and go back to dot-com bubble 2000. Tell me what is the source of your learning if you are trading anything. Only source is news. When there was no social media, how many people were trading intraday or day trading? So through social media, they control entire politics of all socialist country. They control before and after Fed FOMC meeting, how all beginner trader think and feel about economy. They control what people experience about economy. I do not want to name that motivation speaker, but check all the YouTube video about recession in fourth quarter. When recession and economic boom began, through social media, they control all the narrative. And if you have read Communist Manifesto, centralization of credit in hand of state by means of nationalization, bank with state capital and exclusive monopoly. So through social media, they control everything, every trade plan, every psychological element. So they are saying we don't tell people how they should think or feel about economy. If you remember their 500k NFP, just before NFP recession panic, immediately after no recession, just one number and 1 hour. That's not our job. People experience what they experience. First, completely control economy like communism, then tell we do not control what people experience. And imagine if you are trading any asset, Try to live without all social media platform, and then you will see big change in your psychology. Maybe you will see not 99 but 100% change in your psychology. So read again, unemployment at 4%. It has been a long time since we had a long stretch of time with unemployment at or below 4%. So finally we have 4% UR rate. Biden have given permission to start recession. Again reminder from news company, you have indicated one rate cut sometime this year. So what these news company journalists ask that become news headline. So that is the psychology through social media. One rate cut this year. While immediately after CPI number and next NFP number, everything will be changed. She have asked, you don't have crystal ball up there for everybody who is out there waiting on rate cut when consumer expect some relief. Why they need crystal ball? They control all central bank in this world. Their news company is leader in this world. They control all the social media like YouTube. And effect of YouTube in election you have seen in India recently. When they control all economy, total center planning, why they need crystal ball. And now you know why free education on social media. They give you all education for free with social media, but they control everything in exchange. Again, what pressure point will signal to you that slow economy could may break company in term of hiring or break consumer in term of spending. So they want everyone to be poor. Otherwise, communism will not work. What will be the use of central bank? They want your company to be poor where you work. They want their employee to be poor. So they do not ask higher salary. They just want job and willing to work on any salary. You can see credit card default have been going up and they are not at high level. So they want total poverty in their consumer and so much debt in credit card, so they become slave to a job. So this is not economics, this is pure communism, central planning of economy. This is different science and you have to understand, and it is working in a capitalist economy and you are living in a socialist country with different mindset. Again question, you mentioned that unexpected weakening in labor market could bring rate cut sooner. Almost similar sentence he is using since that 517k NFP. Every time he says similar language, NFP comes strong on that Friday. But finally this time he give definition of unexpected weakening in labor market. This is most important line, make note, and this will be super important till 2025. He have explained very well. When I say unexpected, first thing is more than kind of is in our forecast, in common forecast. So if number come more than Fed forecast in their SEP, then it is unexpected weakening. They know what will happen in future, so intentionally they will give low forecast for UR, and then it will go more than forecast and drama unexpected weakness. So maybe first time he is saying, or you can say they are ready for rate cut and they are explaining under which condition you will have rate cut. Labor market has ability, has tendency sometime to weaken quickly. Again apply inverse Kashkari, remove all the note, waiting for that to happen, and it is what we are doing. So they are waiting for quick weakening in labor market. That means big spike in unemployment rate. That's why I'm saying Biden by showing 4% UR have given permission to start recession. And big explosion you can expect near election month. So more we go toward election, more NFP will weaken, and after election first zero then negative NFP number. They are saying something like negative payroll. So if negative NAP is coming, then we will see this negative NAP number before election or after election. And when you have negative NAP, full poverty, your central planner want your economy to go down, company to go bankrupt. When unemployment become negative, all those rate cut will turn into invisible rate hike. Nobody will be asking for rate cut. Again, interesting line like a comedy show in a FOMC speech. Many things would make it on that list, but we do not think I will utter them here. So they are saying I don't want to try give you a specific number of things because that point to date I just don't think we are not at a point to being able to do that. Look, they are saying they want more confidence in inflation and more speech after FOMC because blackout is over. They have said same thing, more confidence. So by the time we have three downtick in CPI, that thing CPI and that thing NAP number will give you instant date about rate cut. So those are not date of news CPI and NAP. Those are date when you can have clear confirmation on your first rate cut timing. That's why they say data dependent. If there is going to be cut in July, before that, no doubt all CPI and NAP number will weaken in big way before July FOMC meeting. And your USD JPY pair finally hit FOMC speech. You can say almost directly they are talking about USD JPY pair. This pair is going up since January 2021 when right at the bottom near 100 nobody talking about where this pair will go. But now in FOMC there is direct question from Fed. Impact of strong dollar. Markets should determine exchange rate, but Japan and more emerging markets are suffering from strong data. So strong data and Japan and many more countries are suffering from strong data because one of the emerging market country have to do rate hike to save their currency. But Japan is their best friend. When they will have problem, immediately they will change their policy next day. So it looks like long term time has come for USD JPY change its direction. And listen what Fed say in answer. We don't actually it is our finance ministry, treasury department, that's been Yellen responsibility for thinking about it. If it see fit doing thing about the level of dollar is just another financial variable. Do nothing for US dollar but they are slave of hedge fund and first they watch entry of those hedge fund then for those hedge fund they change their monetary policy. But a comedy so you control monetary policy, you control Fed and but you do not control level of dollar. You can see how many time like a high school grammar student we don't again we don't manage the level of dollar that is not our job it is not. He can say simple word no but how many time we don't one again one we don't three it is not our job four it is not five time. If you remember that October 3 2023 when gold made bottom and they intervene in USD JPY pair big vertical jump they are already having big problem but without Fed policy this thing will not change. So Fed is saying it is not our plan or is to waiting for thing to break then fix them. First collapse Japanese currency, totally collapse Silicon Valley Bank, collapse UK bond market, then wait for try to fix. Because these central bank always are big fan of Karl Marx. Somebody asked from Kaskari they have photo of Karl Marx in their office or not. They are doing central planning of economy. First break the thing, then fix. but never find a way where poor people can participate in that boom cycle and survive that bust cycle. Like Fed said in that FOMC speech, if labor market, that's mean NAP, that's mean UR rate, which is now 4%. If it goes up more than their forecast, then it is unexpected weakening. Then get ready. Time will come when you will have emergency rate cut, which nobody will ask for rate cut again. And this is election year, their November FOMC meeting, every single word which they will say, it is already pre-planned. Watch carefully what he said in this speech. Market will price in what it price in. I have no way of saying we are not at this stage. Market have already priced in their rate cut. Bond market made bottom in August 2020 and high come in March. So same like that, Fed has given one more advance and last warning. Market pricing before their actual rate decision. Market will price in what it price in. I have no way of saying it.